Let's say you're an entrepreneur, or a really successful criminal. You've got millions of dollars in the bank. You've decided that you're tired of paying taxes, the humiliating fair share of it all. You've already hired the best accountants to avoid all the taxes you can while playing within the system. But now you want to take your tax evasion to the next level. You've heard about trust companies and offshore tax havens, but you're not sure where to start. If you're a high-profile figure, Googling how to avoid taxes from any of your personal devices is not really the safest or most responsible way to go. When you're avoiding taxes, your footsteps have got to be untraceable. And it's not like you can find reviews for tax havens on Yelp. Let's start by defining what a tax haven is. A tax haven is an offshore country that allows wealthy individuals or business owners to bank with the country's local institutions to avoid paying home country taxes on gains or profits. Examples of tax havens are Andorra, the Bahamas, the British Virgin Islands, the Cayman Islands, Hong Kong. These tax haven countries offer the benefit of little to no tax liability, and usually you don't have to be citizens to take advantage of this tax loophole. In other words, tax havens offer a way for companies and wealthy individuals to avoid higher corporate tax rates or income tax in their home countries. So what do the tax havens get for doing this? Well, offshore tax havens benefit from the capital that gets drawn into the economy. Funds can come from various sources. They can come from individuals and businesses with accounts set up at banks, financial institutions, or other investment vehicles. They may charge a fee for new registration of companies, and may charge for renewals to be paid every year. Additional fees may also be charged, like licensing fees. All of these fees and charges would add up, and that's where they make their money. Tax havens aren't totally tax-free though. They have lower taxes than other countries. By attracting foreign individuals or businesses, even if they charge very low taxes, the country may earn substantially more in tax revenue than it otherwise would. The country usually gets the most revenue from corporate investments in business operations that offer jobs to the country's residents. Using the service of a bank outside of your home country is not illegal, and although the term offshore literally applies in some cases to a bank account in the Bahamas, it doesn't have to. Doing business in Canada as an American could be just a drive away. The practice is not just for the wealthy. Some foreign banks will take as little as $300 of your money and start an account. It's important to remember that overseas banks work just like regular banks, and they can set their own account minimums and other terms for customers. On the other hand, some foreign banks will not do business with some foreign clients because of the required compliance. The Organization for Economic Cooperation and Development and the World Trade Organization have rules that force banks to report information on their foreign customers. Each country complies with these laws differently. Some countries don't comply at all, and those are the tax havens you would want to choose. One of the most common ways people hide their wealth in tax havens is by setting up a legal vehicle, like a corporation or a trust, that holds their wealth or assets, but it doesn't disclose information about their identity or about the wealth or assets held by the legal vehicle. These secretive structures serve as a curtain or a firewall between the owner and their wealth, so that the owner's identity can remain unknown, as well as the true value of their wealth. Ultimately, this obscurity means that he or she can pay less taxes than they should. There are various financial instruments that people can use, and they are usually supported by a large and intricate network of lawyers, accountants, bankers, and many other professionals. Some secrecy jurisdictions choose not to collect information about companies established under their jurisdiction, so that they can't be forced to reveal information about their clients. Others actively put up barriers to international cooperation and transparency by making it illegal for bankers to disclose information about their clients to investigative authorities. Let me pause on that for a second and let that sink in. These countries have actually put laws in place that make it easier for bankers to work with foreign entities. If the banks got asked to provide records, they legally can't do it because they would not be in compliance with their own country's laws. It may come as a surprise, but nearly every company present in our everyday life takes advantage of tax havens. Some of the most notorious companies which take advantage of tax havens are Apple. The company booked offshore $214.9 billion. Apple uses Ireland as a tax haven. If Apple had stayed in the US, it would have owed the US government $65.4 billion. Nike. The company holds $10.7 billion offshore. It uses Bermuda. It would have paid $3.6 billion for taxes if tax haven benefits were not used. Nike pays a bare 1.4% tax rate to foreign governments on those offshore profits. Goldman Sachs holds $28.6 billion offshore and uses, once again, Bermuda. Some of the 50 biggest US companies have stashed approximately $1.6 trillion offshore. Those companies include Microsoft, IBM, General Electric, Pfizer, ExxonMobil, Chevron, Walmart. There is big money in tax havens, but how do you actually go about evading taxes this way? Here's a look at how wealthy foreign investors move money in and out of offshore companies. Step 1. Choose a haven. There are about 60 or so offshore jurisdictions around the world to choose from, so choosing shouldn't be too hard. But remember, you want to choose a country that doesn't comply with the rules that force banks to report information on their foreign customers. Step 2. Create a corporation or other entity. You set up a company or a trust or a ready-made firm, and you get help from offshore investment advisors. In one of the most notorious tax havens, Panama, an off-the-shelf option can be approved in as little as 3 days for a nominal fee. Another place to park your riches is in a private foundation, maybe a non-profit organization, which can then own a corporation, adding another layer of secrecy to the tax evasion scheme. The more layers, the more secrecy. Step 3. Create a secret identity. You hire nominees to run business matters for your company or trust. These agents don't manage your money directly. They just do what you tell them to do, and their names will appear on all company documents. Step 4. Open a bank account. The money going in and out needs a home. For more anonymity, some people will open a bank account in a different offshore location than where the company or trust is registered. Step 5. Move the money. One option is to wire the money in one lump sum, but the tax department will then know that the account holder has big bucks abroad. You could also smuggle cash or wire it in amounts under $10,000, which is the minimum requirement for reporting the wire. Tax cheats have also been known to get a bogus offshore company or person to sue them and then settle out of court for a large sum. There are also other options for taking money out, for example, insurance. You take out an insurance policy on someone who is dying, issued by an offshore insurance company, and the payout to the recipient back home will not be taxed. You can also gift the money, which is tax-free too. Another technique is to create what's known as a granny trust or inheritance trust, named for a non-resident for the benefit of resident beneficiaries. Step 6. Spend the money. Just like with money laundering, this is where it gets really tricky, because some of the methods involve deceit and constitute illegal tax evasion. Some wealthy bounty builders simply relocate to their tax haven or any place with low taxes. Others take advantage of gambling schemes. Or they try to spend the money on credit cards issued in the name of the offshore company. However, tax authorities have been known to crack down on these seemingly anonymous credit cards. If you were to follow these ways to the letter, will you, in fact, be committing a crime? The answer depends on laws your country has against evading taxes and defrauding the government. Putting money in an offshore account is not illegal. However, actions that include deliberate deception or obvious bad faith, like when you undertake a business deal solely to avoid paying taxes, those are likely to pique the interest of government investigators and tax authorities. And because several of these ways appear to describe what many countries may consider fraud, they could, in fact, invite a knock at your door from people carrying briefcases and badges. I want to leave you with this quote by Roberto Saviano. Tax havens are where criminal capitalism and legal capitalism meet and merge. Hey guys, thank you for watching. Make sure to subscribe for more.